Just on SIPs, gross SIP numbers at a record high. And this is, of course, the monthly investment you put in mutual funds. So that's what I mean by SIPs. But actual flows are much lower. In fact, in recent months, net flows have fallen about 35%. What is being seen is that people are preferring to invest lump sum because I suppose people have also realized, Parag, just come in on this. People have also realized that these are the opportunities to come in. Do you think that the Indian investor is now mature enough to say that we saw what happened in COVID and those who were brave enough are still sitting comfortably, that when at lows you come in? Do you think that that is the attitude that is there, or there is a bit of nervousness right now? Because regulation has also come in, right? There has been a squeeze on F&O trading, etc., futures and options. That speculative kind of trading is being curbed. What is the mood out there?
So, first of all, I would like to say that after a 10% correction in the market and what we are seeing in rupee, what we are seeing in dollar index and US 10-year bond yield, after the Trump trade has begun, has, I would say, reduced the enthusiasm of retail and HNI towards the market. And just for your viewers, I would like to share some positive thoughts and why they should continue SIP. The most important thing is that India's macros are very resilient today. Fiscal deficit, current account deficit, and most importantly, which I would like to address, is corporate balance sheets are very strong. Banking balance sheet, at least the large cap banks who have not lended to unsecured loans like MFIs, the balance sheets are extremely strong. So I would say there is a political stability. So I am not in the camp of a bear market for sure. I am in a camp where it is a time-bound correction, and as Harsha and Manish explained, that we ran out of, ahead of time in terms of, because earnings for Q2 were muted, GDP growth was 5.4%. But I think everything is going to change over next, and as we say in life and in stock market, everything negative has happened together. And that has reduced the enthusiasm of the investors. And still, I am saying that don't put your entire money at all in at this prices also. But one should continue with SIP because
I agree with you, Parag. But the SIP, the fact is, last few years, SIP funds have grown massively. And I'll take Harsha's view on the data that I just cited. But more and more people have found it easier, have now learned, and are interested in direct trading as well. That's a fact. You have a whole generation of Gen Z who are just, trading at every opportune time that they get.
Yeah, so
they don't have the patience that you're talking about, Parag.
No, but the point is that I would say that you can ask any high-risk traders and high-risk speculators in the market that last correction, and as you rightly said, 12% correction from highs, and the way mid-caps and small caps have been, I would say, rogered, most of that enthusiasm is right now taking a backseat. I think it is back to basics because India is a country with macro resilience and political stability, and corporate balance sheets are not leveraged. And just to go on one point, valuations. Valuations, I would say that wherever there is demand supply kind of thing in mid caps and small caps, there the valuations went up through the roof, or where there was a very high confidence in earnings that this company is going to grow at 30, 35, 40%, and some narratives built around so many other things. I would not like to specify those things, but there the valuations are stressed. If you see the large caps, for example, and here again I'm putting a disclaimer of stocks, some of the stocks which we have in our portfolio. Some of the stocks are trading at, especially in financial space, are trading at 10p, 7p, 12p, 13p. I will not call it a irrational thing to happen, but there the growth is also expected to be lower.